What is up, everybody? Welcome back to the channel. We have not made a video in quite some time. There's a reason for that. If you haven't been following me for a long time, you'll start to learn that when the market is relatively flat, I don't make a lot of videos because I don't like to repeat stuff over and over again. So my shorter updates go on my Twitter, so make sure you follow me. The link is in the description. And when I have larger updates that have good amounts of information, then I do another video. So today we have a lot of information on Bitcoin, Ethereum, and EGLD. We're also going to look at the stock market and net flows on-chain metrics for Bitcoin. So we have a lot to look at. Make sure you like, make sure you subscribe. Let's get started. Okay, so the first thing that we're checking out is the Bitcoin chart. And basically what you'll see is today with the market open, we have dipped further below and now we are in a new regression channel. This is a bottom regression channel that we haven't seen before in history. So if we actually go to the weekly chart for Bitcoin and we're looking at the log chart, when we look at this log chart, you'll see that our bottom channel was basically the channel that we were in previously. This is where we had our previous bottom looking all the way back to March. We have now dipped below this bottom channel and into a new trading channel. This is a bearish move. In all eventualities, this is a bearish move unless we see the price recover back into this triangle and start looking like it's going to break out. We could be in for some more downside here. So we're going to have to zoom in and we're going to have to take a look at where those downside levels really sit. The first thing that we want to get into before we look at those technicals and start looking at where do we actually see the price going in the near term is what exactly happened today. So we're going to start off with this article here. This article here, I'm going to switch to the full screen mode. This article here tells us that the US stocks fell aggressively this morning. We had 700 points dropped on the Dow Jones Industrial Average. So we're seeing here, let's look at a few things on this CNBC article. It says U.S. stocks fell aggressively Monday on concern of a rebound in COVID-19 cases, slowing economic growth. The Dow dropped 777 points or 2.2%, exceeding a 2% decline seen in late January. So this is the largest daily decline we've seen in the Dow Jones Industrial Average this entire year. It also says the S&P 500 fell 1.9% with energy and industrial sectors as the worst performers, and the Nasdaq Composite lost 1.6%. 10-year Treasury yields fell to a 5-month low of 1.19%, and that exacerbates fears about the slowing of the economy, and you had a 5% drop in crude oil. There are two major concerns coming together this morning, concerns about market technicals and concerns about growth. These are basically the most important parts of this article, and keep in mind this massive drop that we've seen with the Dow Jones correlates almost exactly with what we're seeing with Bitcoin. So let's take a very close look at the Dow Jones and the SPY real fast, right? So we're starting with the Dow Jones Industrial Average. On a weekly chart, it doesn't look too bad. I wanted to show you this weekly chart first so you can kind of gauge the difference. Let's go back into our chart view. So you can see here for the Dow Jones, it's been a relative V-shaped recovery since the crash last year in March. So we are much higher than even our previous top at around 29,000 for the DJI. You can see on a longer time frame, this has been a very straight upwards narrow move. And even when it has these upward narrow moves, you have areas where you drop. Bitcoin had a massive drop here with the rest of all the equities markets, real estate, everything took a nosedive in March of last year. Now we're up here and we see a little bit of a dip. It doesn't look like a big dip. We're looking at the log chart, we're comparing percentages, and this doesn't look too bad. But then when you go onto the hourly chart, you can really see that this was a pretty big drop. Right? Compared to where we were, we've lost a lot of points. It's down 854 points as of right now while I'm making this video. This is pretty big when you're looking at an hourly or even a 4-hour time frame. This is a pretty big drop to see in the Dow Jones. Now, you'll see we had similar drops recently. It's nothing, too crazy. This was a similar drop that we had in May. We went from 35,000, which was exactly where we were, and we dropped back down to around 33. So this was actually, it looks like a bigger drop over the course of a couple of days. So in the single day, this is a bigger drop, right? Because then you would have seen these two candles. So if we just look at this on the 1-day chart, you'll see here, this was over a period of 3 days. This is over the period of a single day. So we've had a much bigger daily drop than we've seen before. And another thing that's very interesting is it looks like we formed somewhat of a double top. right, on the Dow Jones Industrial Average chart. So seeing a drop here is very bearish. You would like to see a higher high and then a drop, but that didn't happen. It topped out at the same place twice over multiple months in between. So that is quite a bearish move that we've seen. If we turn over to the SPY, SPY looks a little bit more bullish in the drop that it's seen. And the reason for that is this drop is still putting in a higher low, and it is still technically in an upwards wedge, and it's moving upwards as it has before. So the SPY doesn't look as bad for fundamentals on the chart, but the DJI definitely does, because if it continues dropping over the next day or two, it might actually put in a lower low similar to what happened here. So if the DJI drops below this level, which is about 33.2, which is roughly another 500 points from where it is now, that's pretty bad. You don't want to see a lower low getting put in on the DJI. That's going to be bad for all markets, including Bitcoin. So watching the DJI is going to be pretty important. Even watching the SPX is going to be important, because you don't want the S&P 500 index to drop below roughly 4,137. That's about another 100 points roughly from where it is now, 110 points. So if you see another 110 point decline in the SPX, that's going to be a very bearish signal. If it comes below this prior bottom, then you're no longer going to put in a higher low. It's actually going to be putting in a lower low. Lower lows are bearish, and you have all the traders in equity markets looking at these charts for bearish technicals to figure out if they need to lower their positions and take less risk. So keep these in mind. Keep an eye on them if you do not. We're going to go back to our Bitcoin chart now. So back on our Bitcoin chart, one thing that we can clearly see is that we've had this consolidation pattern for quite some time. Now what's happened is, kind of like a guy at the gym who tries to lift too much. The price has dropped. He couldn't hold the pressure, and it has dropped. We had two triangles that we were watching, all right? One triangle, which was the major long-term triangle based on the two tops we had. This is not really validated as of now. As of now, what's more validated is this smaller triangle in between that we've been hitting tops on, and this has formed just like any other continuation pattern. The price is continuing in the trend, so it's kind of invalidating this triangle now, unless we see the price come back up, at which point we may extend this triangle out. So right now, I'm leaving things the way they are because these do not show a clear pattern. Now, in the title for this video, I said that this is a bearish drop, and the reason that this is a bearish drop and it seems like the bears may be winning is because if we continue to go sideways here and we drop further, we're looking at a potential to hit all the way down to 25,000, which is the bottom of this regression channel that we just broke into. It's more likely that we'll continue to trade sideways, but that's actually what we were hoping for in the previous channel. And we were hoping that when we hit the right side, we were going to bounce off. We didn't see that bounce yet. That doesn't mean it's not going to happen. There are times that you go below these trading channels, go sideways a bit, and then you bounce back up. So it is still a possibility until we start going down to the $28,000 range and have sustained trading there. I wouldn't be too worried about a drop to 25, because even if we drop to 25 quickly, it'll likely get bought back up pretty fast right now. So we need to watch a little bit longer to see exactly what happens. But if we go back historically to previous areas where we're trading in this major channel for a while, you will see that we traded sideways into a bottom channel until we started following it up and then broke above it and flipped it into support instead of resistance. So it's possible we see something similar to that now coming into here, which would be sideways consolidation here with an upwards trend and then breaking above that line and trading up against it again. This would put us back into the 40,000 area coming in August to September. So this is a possibility that you see more sideways trading at the 30K range all the way through August, and then we start to see an uptrend until we break above this. Definitely possible, but just as likely that we go sideways and drop below this channel and start trading in the $26,000 to $28,000 range. It just depends when the bullishness will come back. And right now we don't have a clear idea. So this is the time, in my opinion, to choose your bottom targets and put in your orders if you plan on accumulating long term, because these prices may not be around forever, right? They might be around for another few months. It's possible. But in the next couple of years, I doubt they'll be here anymore. You're going to have a lot more people coming into this space. I think the space is going to grow a lot, and I think it's going to see a lot of increase in valuation. Right now, we're in a lull after a very big bull market. I think the bull market is still on, but this is just a gap in the bull market, kind of like we saw in 2013. We're about halfway through the amount of time that we had a gap in 2013. In 2013, there was like over 200 days of a gap in between where it seemed like a bear market, and then it just went right back into bull market. And I think the same thing's going to happen. We're at 95 days right now, so it could be another couple of months as we keep trading sideways and keep building up pressure and building up momentum and cementing this trading range. Once we blast through it, I don't think we're coming back. Kind of like we never went back to those lows of 2013. So I think it's going to be very interesting to keep an eye on this and trade accordingly. You know, make sure that you're taking advantage of these situations and make sure that you're doing it with a good risk profile. You don't want to over leverage yourself on risk, because then if things do crash further, you're in a bad position. So just make sure you're trading safely and you're putting in what you're willing to lose. That's the best way to do it. So we'll go down to the hourly chart now. And when we look at the hourly, you can really see the moves that occurred today. You can see that at the start of the morning, this was the 7 a.m. or this was a 7 a.m. Eastern candle. This was the 8 a.m. Eastern candle. And that's when we started seeing it dropping. That is around the time that we were seeing pre-market numbers for the stock market, and Bitcoin reacted similarly. You have a lot of people trading Bitcoin the same way that they would trade the Dow Jones Industrial Average. If they see that Dow dropping, then Bitcoin drops. But sometimes Bitcoin will decorrelate itself. In this case, you could see a lot of people wanting to buy below 30K. So if the price drops to 29, 28, you might see a spike in Bitcoin, whereas the DJI and SPY may remain flat. So these are things to watch out for. Personally, I have an order set at 28.5. I have another one set at 29.5. So if it does drop below 30K, I'm going to accumulate more Bitcoin, and I have orders set similarly for EGLD as well. I don't have any for Ethereum right now because I already have a good amount of Ethereum that I'm happy with. So I'm kind of accumulating Bitcoin and EGLD right now. Even ADA Cardano is sitting at $1.12. That's a great buy price for that as well, in my opinion. Not financial advice, just my opinion. Okay, so let's move on. We've taken a look at the Bitcoin chart. We've taken a look at the DJI and SPY. I want you to also take a look at what we're seeing on the Bitcoin chart for its RSI. The RSI right now on the 4-hour is sitting at 36. That is a massive level for increased accumulation. We're also seeing the daily is sitting all the way down at 36 as well. The daily chart of Bitcoin being at a 36 RSI and topping out at 50 really tells us that we haven't moved back into bullish momentum yet. So these are still great opportunities to accumulate because RSI is going to bottom out at around 30 and it's not too far. So if we have any more drops like down to 28, the RSI is going to become oversold and we're likely going to start going sideways and moving up over the next couple of days. So keep this in mind. We're at an area now that the biggest concern for me is our volume profile. So if you look at the right hand side, this volume profile tells us where the majority of trading volume is, and you can see that it's above us. So this is going to form resistance, right? We're going to have a lot of resistance breaking back into this area and breaking above it. And now we're falling below into an area where we don't have as much trading volume. If we increase the time frame, you can see trading volume really tapers off below the 30,000 mark. So let's actually go even longer. Let's go back to a range that shows us really how this compares over the long term. And you start to see here now, we have massive trading volume in this 30 to 37K range, which is great, but now this red line that's going across is right below it, and there is not a lot of trading volume below us until we hit 23K, and then until we hit 20K. So is it possible for us to drop down to these levels? It is possible. It's unlikely though, because you'd assume in this range, if it starts dropping, you're gonna get a lot of people buying it back up, trying to get cheap Bitcoin, including miners, including organizations, big companies. So I would say that these are good accumulation ranges here, anywhere between like 25,000 and 30,000. But I would also say it's unlikely that Bitcoin stays there very long. I think that Bitcoin will get pushed back up into this 30 to 35,000 range relatively quickly if it drops further. So these might be short-term opportunities to pick up Bitcoin. That's why I have my orders already set, because I could see this turning back around and going back up to 35,000 at any point in time. I think it's severely undervalued where it is, so it wouldn't shock me one bit. Okay, so that is pretty much it for the chart and the technicals. There's not a whole lot else to see here because we've been moving so flat. The main thing I'm watching now is to see how we react with the bottom of this triangle, and I want to see if we keep hitting resistance on it or if we break back above it. The key to break right now is around 33,000. We want to get above 33,000, or we want to flip it into support, because this is the range where we have this trading channel. Right now we're falling into this bottom trading channel. I want to see us get back above on the top trading channel. It could take time, but that's what I'm going to be watching. I'm also going to be watching the bottom of this consolidation triangle, because this is likely going to turn into new resistance. So keep an eye on these levels. You can see my chart in the description below. You have a link to my TradingView. I just saved the chart, so feel free to take a look at it. If we take a look at the Bitcoin stock to flow model, we'll end Bitcoin with this. The Bitcoin stock to flow model, you can see, is very, very, very deviated from where the price is supposed to be. Right now, the Bitcoin price is sitting at around 30,000. The stock to flow model is predicting the price right now at 87,000. So we are insanely undervalued right now. Historically, every time Bitcoin has gone sideways and broken its correlation with the stock to flow model, you eventually have an inflection point where the price starts moving up and catching up. So for example, I remember this entire period where we were trading at around 9,000 on the stock to flow. Stock to flow kept going up. We went to the right, and then come October, so this was starting in May of 2020, by October 2020, about 5 months later, we're still at only 10 to 11,000 for the Bitcoin price, but the stock to flow had it valued at 16,000. And then suddenly we had massive moves up until Bitcoin not only caught up to stock to flow at around the $23,000 mark, but then we exceeded it significantly, and we kept above it for quite some time. Now we are back down below it. I think that it's possible that we continue below it until we close the rest of this box, which breaks to about September, and then we start seeing massive rises up into the $100,000 mark towards the end of this year or early next year. So I think this is going to be a drawn out process. I think all of us have to be ready for it. Something could change, but if it doesn't change and things go the way they are, supply and demand, I think, are what are going to control this market into the price appreciation, because supply and demand are true metrics and they apply to Bitcoin. The supply is continuously decreasing, and we are seeing the demand continuously increase, even though it's at a small rate at the moment. Okay, so next we're going to take a look at Ethereum. Well, when we pull up Ethereum, you know what? Actually, I want to show you one more thing with Bitcoin. So we'll go back to Bitcoin. I want to pull up the Fibonacci retracement. Hang on a second. Let's pull up our longer term fib. So you'll see our longer term, this is our super long term fib. If we go back to the fib, this goes all the way back to the bottom of March, right? If we look at this Fibonacci retracement, I want you to keep in mind that we have a golden pocket sitting at around 27,000 and going all the way down to 25,000. So we talked about this range. This is actually now at the bottom of our trading channel. So if we come down and we bounce off the top of this golden pocket, that's going to be a very bullish sign. If we go into the golden pocket and break below it, that's going to be a very bearish sign. Then 20K is going to be on the table, right? So keep that in mind. We got to take a look at this Fibonacci retracement, and we got to be watching how does it interact with this golden pocket if it goes down to it. So keep that in mind. If we drop below 28, I'm going to be looking to see how do we react to the $27,000 mark, because that's the golden pocket. That's the area that we would expect to see a massive, massive bounce if we are still relatively bullish. Keep that in mind. Okay, now I do want to show you the hidden bullish pattern. All right, now the hidden bullish pattern is easy to miss. We're going to go here and we are going to turn off our symmetrical triangle. We are going to turn off our Fibonacci retracement. The only thing I'm going to leave on are the regression lines. Now, when we look at this, it's very simple to put a triangle here and forget about anything else. But when I look at this, I'm really seeing a descending wedge. So I'm going to turn that on. This is what a descending wedge looks like. And this is a very bullish pattern. Descending wedges normally break bullish, right? So what we are looking at here is the price descending now into this trading channel. And basically, if we continue these lines going forward, let's say we just extend these lines out, right? We are using this as an area where we have some tops, right? So we can actually come all the way down to here if we want. right? That's not a bad area to look at. And we can use this where we're having relative bottoms. You'll see here that if we extend this out quite a bit, the area where these two lines start to get really constricted is where you want to see how does the price react. If the price stays between these lines, a little bit up, a little bit down, but keeps relatively consistent, then it's going to be a good indication that around this area, end of August, we are going to see a huge breakout outside of this and likely take us right back towards 38 to 40,000. That's how these descending wedges normally play out. Now, I haven't brought this up before because this descending wedge was just starting to form, but now that we have a few more bottoms here to confirm it and a few more tops, this is really what it's looking like is happening, that we are having a descending wedge occur. And every time I've seen these patterns, for the most part, in the higher amount of cases, these break bullish. So if we continue here, it gives us a good idea of where price might stay, and that's between 29,000 and 31,000. Even at the bottoms, we reach like maybe 28,900 or even 28,400 at a low right here. So we have the opportunity to go down to those levels, which means that any orders I have there may trigger, I'm hoping. But if we drop below this, that's going to make it really key because that may change the descending wedge. So this is another one to look at. For now, I'm keeping this turned off, and I'm going to keep the symmetrical triangles up because I think it's more important to see how we react with the resistance caused by the base of this triangle that has been going for so long. So that's what we're taking a look at. That descending wedge could be the hidden bullish pattern. So we really want to keep an eye on that descending wedge over the next month. If it continues to play out, then I think we're going to have a huge breakout as we reach the end of it. So keep that in mind. All right, now let's go back into our chart view. I should have been in that, and we are going to switch over to ETH. Now with ETH, it's actually looking a lot more bullish than most other charts. With Ethereum, we are not only staying within these trading wedges, we are actually starting to drop a little bit below this bottom trading wedge, which is the lowest Ethereum has ever gone on the log chart. So we want to keep an eye on how it interacts. I'm going to expect that as the market recovers, that Ethereum is going to go back above this line. So I haven't drawn a lower channel yet, but I will draw that in the next week or so if we keep trading sideways. The key here to remember is that we've already bounced off the golden pocket for Ethereum 2 times. You can see it happened here and in 2 instances here. So actually 3 times. We really want to see how this continues to play out with Ethereum. Overall, Ethereum is looking a lot more bullish than most because it really hasn't lost much. If you go back to where we were March of this year, that's where we are now. We had a period of overextension, and now we've come back and consolidated, but we've consolidated to levels where we have massive support, and we haven't dropped below them yet. So Ethereum, in my opinion, is looking very, very bullish. I know that a lot of people think that, hey, Ethereum should be at 4,000. I think it should be valued higher than that right now too. But last year I was buying Ethereum at $145, and right now Ethereum is at $1,800. That is a massive move for 1 year. So if it continues to go sideways and there's more opportunity to accumulate at these levels, I don't think anyone should be complaining. Hoping that things just keep going to the moon is incorrect. That's not the right way to view these markets. And that's why I don't follow a lot of YouTubers who are all moon all the time. So anyways, Ethereum I think is looking really good. Nothing really overtly bearish on the charts. RSI is at a good level. The golden pocket is holding as support right now. We are seeing relatively good volume, nothing major coming back yet. I'd like to see huge volume moves come back and take the price up. I don't want to see huge volume moves take the price down. That's never a good sign. So a lot of the trading right now and the downturns we've seen have been with low volume. That's a good sign. That means that lower volume's moving the price, and that's a good thing because when higher volume comes back, the price is likely going to skyrocket. So we're going to leave things as they are with Ethereum. I'm just in a continued accumulation phase. I haven't been buying a lot at these levels because I bought at these levels the last time. When we were at these levels in March, that's when I was buying. So I don't really need to buy yet. If it drops further, like maybe down to 14, 1500, I might buy a little bit more because that's lower than my average purchase cost anyways. Actually, no, my average purchase cost for Ethereum is much lower because I bought the majority of my Ethereum at like $200-300. But still, if it drops below 15 to 1800, then I'll probably start buying a little more at that price. Okay, so we'll leave this as is. Ethereum looking good, nothing major there. With EGLD, we are seeing that EGLD also, like everything else, is reaching a new trading channel. In this case, we reached a bottom here previously, and it looks like we were reaching a bottom here, but now we've fallen below it. So we really want to see, just like everything else, how does EGLD interact with this area? I'm going to remove this ellipse. I want to see, is EGLD going to get support at this Fibonacci level, which right now is around 54. I don't even really want EGLD to go back down to that level. I would rather it trade sideways at around 70 here and then break back above the golden pocket. We broke above the golden pocket once, but when we dropped back down, we fell through its support. So we are technically still putting in even a descending wedge here. This is not really a consolidation triangle. This is more a descending wedge. So we can draw those lines here, and you can see that it's going down this way, and it is going down this way. This is actually a wider descending wedge. We don't have any confirmation on this yet, but that's kind of what it looks like. So I'm going to get rid of that now. We're going to keep this here for at least another month. We want to see how this looks. The key for EGLD is to break above this level, and I think that EGLD may see some price appreciation sooner than others, depending on when we see the Maiar exchange go completely live and how people react with that new DEX and whether more people are brought in. Overall, the staking numbers, everything has been looking pretty good for EGLD. I haven't seen any major declines anywhere. And honestly, staking has been great. I've been making a pretty good return on all my staking pools, so I'm very happy with the amount that I staked and with the amount I've continued to accumulate, and the fact that I've been able to accumulate over the last couple of months over or under $100. That's been really great. I'm continuing to be bullish on EGLD because I think the project overall is still very bullish. If we look at this at the long term, you can see here that we had two areas where we bottomed out, and in one of them we actually came slightly below this trading channel. That's kind of where we are now. So it's a big possibility that we see something similar where we trade slightly sideways at this bottom line and then reverse. That's kind of what I'm waiting for. Haven't seen it yet, but overall, I mean, look at this EGLD chart. EGLD looks insanely bullish as a long-term project. So I'm sticking with it because I really think that in the long term, we could see EGLD up at these levels here, which is around 300 a coin, and then eventually topping out again anywhere between 1,000 to 2,000, potentially even higher if it continues to go sideways throughout next year and then has a peak like maybe in a year and a half. So we'll see what happens with this. It is a very risky asset like many others, so make sure that you're risk managing properly. I think things like Ethereum, EGLD, Cardano, all of these are very risky when compared to Bitcoin. Bitcoin, I think, is going to be a lot more stable long term, but a lot of these altcoins, they are going to see much bigger price fluctuations. So just be ready for those and manage risk properly. Okay, I think with EGLD, we'll probably have to do a dedicated video in about a week talking about updates for Maiar and how everything is going as far as the project completion dates and NFTs, stablecoins, all those things. I want to get all the updates on it. So we'll do that in the coming weeks. For right now, the key to watch is Bitcoin and the stocks. We need to watch those. Let's take a very brief look at the on-chain net flow metrics and a couple of other metrics on CryptoQuant, and then we're going to wrap up this video because it's already reaching 30 minutes. Okay, we'll switch over here. Now we're looking at CryptoQuant, and what you can see here, these are our on-chain net flow metrics. So if we look at the block level, the first thing that we noticed is that we had a massive inflow of coins, about 1,700 coins, and this was early this morning, 3 a.m. Since that time, price declined. We saw some more inflows, and then price just took a nosedive. It really dropped, right? And we had more outflows. When the price dropped, we had Bitcoin leaving exchanges. But now let's zoom out. And you see here we have some massive moves that occurred 2 days ago. So what exactly happened? Well, 2 days ago, we saw a huge inflow of Bitcoin, about 35,000 Bitcoin coming onto exchanges. And then we saw about 35,000, a little bit more than that, leaving exchanges. So I'm not sure what exactly this move was. Was this an OTC buy? I'm really not sure. So these two moves I'm going to somewhat ignore because there wasn't too much price fluctuation after this occurred. But we will see something here. Here you have about 10,000 Bitcoin going on to exchanges. And then after that, you have about 12,000 Bitcoin going on to exchanges. But then we only see about 8,000 Bitcoin leaving exchanges. So that leaves anywhere about 12,000 BTC still on exchanges after these metrics. Well, price continued to move up. I think that this Bitcoin stayed on the exchanges for the last couple of days. Price moved up, and then that Bitcoin started getting sold and helped lead the price down. And you likely saw a chunk of it get sold here too, along with the 2,000 or so Bitcoin that was moved onto exchanges early or late last night. So keep that in mind. The net flow metrics seem to tell us that there was a lot of selling going on. I don't have access to Glassnode anymore. I got rid of that subscription because it was too expensive. And that may show a lot more information about actual address flow. So if we can take a look at that, I suggest someone who has Glassnode takes a look at it and leave some comments in the comments below letting us know what you see. Bitcoin difficulty has continued to drop, which means that it is more profitable to mine Bitcoin right now. Leverage ratio has started to go back up, which means that more people are using leverage and starting to trade on derivatives again. The PWEL multiple, which kind of shows up the value of Bitcoin, bottomed out at about 0.44 and now has continued moving in an upward sideways trajectory. It is still technically on a downtrend, so we want to keep an eye on this. The PWEL multiple basically tells us how profitable it is to mine Bitcoin, so we want to keep an eye on that. Hash rate itself has continued to go up since it hit the peak bottoms down here, and we have seen that it is kind of in an uptrend right now. So as more mining gear comes online, hash rate is going back up. All in all the on-chain technicals are looking fairly bullish. The only thing that looks bearish is when you see large net flows coming in, and these are usually short-term bearish signals, and it looks like they've been pretty accurate. Huge net flow in, price decline. Net flow out, price goes up. Net flow in, price decline. So we're going to keep watching these, but what I'm really going to be looking for now is massive net flows out to see at what point does the price start to reverse, because right now I think the price bottoming out anywhere between 28 to 30K is likely what we're going to see, and then you're going to see a lot of buy pressure and a lot of Bitcoin exiting exchanges. So we're going to keep an eye on this. I'll have an update with the latest net flow numbers in my Twitter by this evening, so make sure you follow me on Twitter. The link is in the description. I hope you found this useful. We're gonna have more videos coming very soon, and I'm gonna wrap this up with one thing on the full screen mode. All right, you have a draft bill coming out for the legal Bitcoin framework in Turkey. It's ready for Parliament. All right, you have a mayor of Jackson, Tennessee saying that Bitcoin is the only way to fix inflation. Check out some of these articles. There are going to be very interesting things to see, because I think a lot of people are going to start realizing the value of Bitcoin over the course of the remainder of this year, over the next 3 to 4 months. And that's because inflation globally is hitting numbers never before seen for these generations, for these new generations. And Bitcoin is an option to beat hyperinflation and central banks and global governments that are just printing the hell out of money. That's what they're doing. And right now you're starting to see people realize it. So keep an eye on some of these articles. These are very bullish when you start to see people that are in government positions going against what the central banks and Fed want them to do, which is, talk crap about Bitcoin. Some of them now are saying Bitcoin might be our only way out. And that's what I think is key, and a lot more people are going to be figuring that out. Hope you enjoyed the video. I will check you guys out soon. It's about 33 minutes. Hope it was a good enough update after not seeing me for about a week. You'll probably see me a lot sooner, because it looks like now we're getting a little volatility back into the market, and I think we're going to see that upside pressure coming in very soon. Follow me on Twitter. Follow me on Twitch. Live streams will be coming back sometime soon. As we start seeing more market activity, I'll start coming back. Until then, catch you on Twitter. Hope you enjoyed the video. Like, comment, subscribe. See you next time. Peace.